Hello, welcome back. In this video we continue our discussion on journal entries. In the last video we talked about the journal entry that is required at the end of the period or after a job ends, and that was debiting work in process, crediting manufacturing overhead control for all the overhead that's applied to your jobs based on the predetermined overhead rate. So let's think about what we've done here, and let's back up just a little bit. So throughout the month, all the manufacturing overhead that came in, whether it was electricity or indirect labor, they were all a debit to the manufacturing overhead control account. And then when the period ends, we credit that same account, manufacturing overhead control, based on how much manufacturing overhead we're going to apply to our jobs. So what that does is it takes the actuals as a debit and then the amount we're going to apply as a credit. And if you remember, the predetermined overhead rate is an estimate, so those two numbers are never going to be the same. The debit will not equal the credit. So we'll have a small amount left in manufacturing overhead control, and we need to clear that account out. That is just a temporary balance sheet account we use to put our actual manufacturing costs in as debits and then apply our overhead as a credit. So we need to clear that account out. And what we would do is, whether it's a debit or a credit balance, we would remove that, and the transaction would either debit or credit cost of goods sold to clear that account out. So that's the second major journal entry that needs to be done to clear out the end of the month period. We have to clear out the manufacturing overhead control account. We've either under or over applied overhead on our jobs.